Hello market participants, welcome back to the channel. So in today's video, we're going to have a look at Tata Elxsi and why it has been struggling over the past few years, and also why its stock price increased despite weak Q4 results and overall weak results. So before we start the video, we'll briefly understand the business of Tata Elxsi. So it has two major segments. First is the software development service, and next is the system integration service. System integration service is only 3% of the business, so we'll ignore that part. In the SDS segment, we have automotive, we have media and entertainment, and then we have healthcare and life science business. In automotive sector, what it does is that it basically helps car OEMs, that is original equipment manufacturers, and car companies design their infotainment system, software upgradation, ADAS, and electric vehicle software. In the media and communication businesses, what it does is that it helps OTT platforms like, let's say, Hotstar or Netflix with their user experience design, their streaming technologies, set-top boxes, their overall software. And next is the hospital and lifeline business. What it does is that it helps to design and test medical devices like software, like MRI machines or health monitoring apps. Next we'll look at why the stock price has been tumbling and why the business hasn't been doing well in the past few years. Right. So before we understand why business hasn't been doing well, one thing we need to understand is that this is business. This is the type of business where there is high operating leverage as well as deleverage. So what operating leverage means is that the company has a fixed cost. Say in that case of Tata Elxsi, it has fixed costs in the software. They have to spend fixed employee costs, fixed salaries, fixed engineers. They have to train their engineers as well before any upcoming project, right? So they have fixed cost. Now, if company manages to increase its sales, if company manages to increase its sales growth, what happens is that the sales units get spread over. Is that the fixed cost gets spread over different sales unit. However, if the sales slows down, the company still has to pay the fixed cost, and as a result, what happens is that the EBITDA margins or the operating profit margins contract. Whereas in case of exponential sales growth, as we saw during 2021-2022 in the IT cycle, is that when sales grew at a faster pace, we saw margin expansion because what the fixed cost spread over um, a few it basically spread over more units of sales, right? So let's understand with an example. You can see in 2021 and 2022, sales growth was pretty high, like 35-27%, and what we also saw is that margins expanded from 25 odd percentage to 30-31%. Similarly, in we can see quarterly as well, results increased. We can see sales growth was increasing 30 odd percent in every quarter. But what happened is that after the IT peak in 2022, what happened is that we saw revenue slowdown in this company. Basically, once एक time पे company was growing at 30%, but now what happened is that slowly revenue slow down, and now what's happening is that it is showing single digit revenue growth, and in finally this quarter it showed basically revenue degrowth. So also you can see that operating profit margins decline from healthy 30 odd percentage to now it's almost 23%, right? So this is one thing that you have to understand in these type of businesses. Similar case can be seen in KPIT, LTTS, that is LNT Technology Services. Same case can be seen in Scient. So these are basically these type of companies where operating leverage and deleverage is high. So now impact is on the net profit. You can also see that net profit used to grow at 30-40, like high growth, and now what it has done, net profit is showing degrowth. So what is the way out for this company? The way out for this company is to basically increase its sales growth, okay, which due to which the fixed cost will get spread over, and also company will again enter into a operating leverage. So now that we understood what operating leverage and deleverage cycles are, we look at why the stock price didn't react as much to the price. In fact, the stock price increased by 10 odd percent. So what happened is that ever since 2024, we've seen that company has grown revenue by only by single digits, right? Due to which what we have seen is that the P ratio, which was one time at like 110, or you can also see that the median P is 60 times, right? So what happened is that 60 times ka median P corrected to almost 38-40 times. So you can also see is that 3 years P, like median P was 60, right? So what happened is that we saw P contraction. Also, price fell from a high of 10,000, almost 10,000 to 4,000, let's say 5,000 almost. So we saw 50% correction. So now what has happened is that stock is trading below its 3 years and 5 years median P, and you can, at this point you can see that the worst has been factored in. Not the worst hasn't factored in, but the market has factored in significant bad news from the company. Right. Now an interesting case study is that during when it reached the peak P of around 110 times, the market had factored in most of its future growth, due to which we saw sideways P, and then slowly we saw margin P contraction. A similar case is that now what is happening is that the market has factored in most of its bad news, or most of its, you can say that company won't be able to perform well, right? So that is why in today's quarter also, in today's results also, we saw that revenue did not grow, profits collapsed. But why didn't price react? Because of the Dow theory that market had already factored it in, right? Plus another key, good point is that a company is a cash flow, like basically a cash flow machine. Company, I don't think company ever had one bad quarter. So this is also one reason, is that because company has good cash flows, market didn't discount it as much. Now we have seen a P contraction of almost 50% from the top, but healthy balance sheet, healthy cash flows, this helps company protect itself during downturns as well. Now let's look at another reason why share price almost increased by 10 odd percent, right? So if we look at so if we come here in company's presentation, what we can see is that management commentary for the current quarter or the FY25 was not good, but management commentary or management guidance for FY26 is comparatively good as compared to this quarter. So you can see even deal wins were higher. And now an interesting that company is doing is that it is diversifying across different sectors. Like we also saw that company was helping HAL in some of the defense projects. We also saw it was helping Garuda. It also partnered with Garuda for aerospace. So you can see that deal wins have been pretty good. So this is also one reason why why markets reacted positively. Like it has good OEMs. It had a euro £50 million deal with a global OEM in Europe. SDV is software defined vehicles. Next is Suzuki. Next is Nidec Corporation, and it has also done strategic entry into aerospace and defense. Like it has successfully handled a HAL with Garuda Aerospace. It is also signed an MOU with the National Aerospace Laboratory. So you can see that deal wins are coming in, and that management in the automotive sector, as far as I can recall, yeah, management had also said that in the automotive sector, one of the deal will be ramping up in Q1 FY26. But what happens is that due to political uncertainty or the global macro headwinds, these might slow down. But management, despite the tariffs and the economic situation, management is saying that their automotive deal will ramp up significantly in the Q2. So I'll just show it to you guys. And yeah, another reason is that company is a good dividend paying company. Why company pays good dividend? Because Tata Sons has most of the stake, and they also want to receive good division. Healthcare and life science was one division that was the best performing. Also, the healthcare, this is one of the reasons why Persistent System also had the best numbers among the mid cap IT companies. So just a second. Yeah. So management expects ramp ups to resume in Q1 FY25. Margins and growth are expected to recover as deal flow improves. Basically, what it means is that once execution ramps up, once sales growth ramps up, margins and growth will come back to normal. Right. So there are some headwinds, and but the deal wins have been strong due to, as you know, markets are always forward looking. What do you mean by markets are forward looking? Forward looking, basically market acts like a fortune cookie teller, right? So market always wants to predict. Market works on expectations, and that expectation can be seen in the price. So as you can see that market was expecting Tata Elxsi to not do so well, and therefore valuations compressed, price also fell down, right? On the other hand, if you see from May 20, the price increased. Why? Price increased, P expanded. Why? Because markets had high expectations from them. So this is also another thing. And I say market are forward looking. So market is looking at all these deal wins, all these market commentary, and maybe market thinks that the stock might not be so bad. Like don't mistake me, the stock is still expensive. We'll have to see for another quarter if the growth resumes. But another example of forward looking is that, like, if a company increases its margin guidance, or if company if, like, let's say if a company receives a big order, right, the immediate reaction is seen in its price even before the order is actually executed, right? If company guides that they will be increasing their margins by, let's say, 5-10% in the next financial year, its impact will be seen in today's price, right? So that is basically what we mean by forward looking markets. So this is what happening. So this is basically a short video on Tata Elxsi. Let me know down in the comments below what are your thoughts on this business, and what next videos I should do on. Hope you all like the video. Make sure to like and subscribe for more such content, and I'll see you guys in the next one.